Good day, everyone. I'm Jean-Paul Tsotsos, Interim CEO of Chesapeake Gold. Chesapeake is an exciting story. We have three assets of interest. There's the Metates project in Durango, Mexico, a 19 million ounce gold deposit with another 500 million ounces of silver. We also have proprietary technology in-house that allows us to unlock gold from refractory sulfide minerals, something that would be advantageous globally since there's a lot of assets and projects globally that have refractory challenges. Finally, we have our Lucy project in Sinaloa. It's a new discovery, and I'd love to share all this news with you. But Matt,
welcome. We're not met or spoken before, Jean-Paul. So I appreciate you coming on and giving us an update on what's going on. But you've replaced Alan Pangborn as CEO. Tell me a bit about yourself. What's your relevant experience? Why have you been appointed?
Yeah, so I guess I'll go right back to the beginning. So I'm actually a geologist. I did my undergrad and my master's in geology at the University of Toronto. And then subsequent to that, I worked in a junior company called Wel Nickel Corporation. About 4 years there was about 27 holes in the ground. We did a PEA, PFS, feasibility study. We IPO'd the company. Through that process, I wasn't just doing geology, but I worked closely with the metallurgical team, looking at the geometallurgical model for the deposit. It's a large 10 billion pound nickel deposit. The grades were 0.27% nickel. So we had to look at the individual blocks to understand what the recoveries were, which is actually applicable to Metates. Metates is a large deposit again, about 1 gram per ton gold equivalent. And we have to look at the geometallurgy of that as we advance it. Subsequent to that, I did some consulting for about a year, and then I went and did my MBA at the University of Alberta in natural resources, energy, and environment specialization. I went to work at BMO Capital Markets for about 4 years. I worked under Andrew Kipe and Jessica Fung, covering junior golds, and as well as silvers from junior level all the way up to senior. It was a great experience. I got a lot of knowledge, met a lot of investors, got to meet a bunch of companies as well. One of those was Silver Standard, and Alan, our previous CEO, was actually the COO there, and I had a chance to get to know him, and that kind of led into where I had the opportunity to join Chesapeake. But in between BMO and Chesapeake, I did about 5.5 years at Hudbay Minerals in their corporate development department. There, I helped develop the strategy. I acquired the minority interest in Rosemont. We acquired Mason, something we acquired for about $19 million US. And right now, at these copper prices and the latest PEA, it's a $1 billion project. So a lot of great experiences, and both on the technical side and on the financial side.
Right. Look, I know you alluded to a couple of things which may be relevant from the past as to how you apply those to Metates. But when you were talking to the board, when they were looking at hiring you, what did they set out as the challenge for you? What problem are you solving?
Yeah, so there was a couple different things when I was brought on originally as VP Corp Dev IR. So I wanted to get our message out there more, get the understanding of the market, both for the technology side, but also for Metates. It's a reinvented story. When Randy Rifle was running it, he did a great job putting together a good portfolio of assets. Metates, obviously, large deposit, but with the challenges with the metallurgy, it was really Alan coming in that brought the technology to unlock the deposit. And so that whole reinventing story, Alan brought me in to help push that story out and allow people to understand exactly how the company has changed. And during that time, we actually, one of those other properties Randy had, we made a discovery, which is Lucy.
Right. But I guess what we need to try and do is kind of help not just your shareholders, anyone looking in at this, to understand, what's your focus? Where's the value created? Metates, it's got a lot of ounces. It's refractory. And, I think I've spoken to Alan a few times about the, oxidative leach process to try and solve that, crack that code, as it were. Is that the focus? Is making new discoveries such as Lucy the focus? Is that an easier story to sell? I mean, again, how are you coming at it?
Yeah, so we're going to continue to move forward with Metates and the metallurgical work. I actually was in Vancouver last week. I was with the metallurgical team in our QP. I went and had a look at all of our columns. Back in September, we put out a press release. We had found a new regime that is 50% faster than any of our previous results. And I had a chance to see those in the lab, in columns. We have a couple columns that were put on afterwards. So the thing with the metallurgy is, it's really exciting. It's kind of a long-term play. There's about 3 billion gold deposits out there, 3 billion ounces of gold out there, and about 25% of that's refractory. So that's a large nut to crack. And we believe we have that technology in-house. Now, when it comes to near term...
And just explain to people, perhaps somebody coming into it, because we're seeing a lot of investors coming in from outside of natural resources. The refractory component is why it's not loved and appreciated is why?
Yeah, so the reason why it's been challenging in the past is you usually requires, crushing, grinding, flotation, and then you have to put it into a big tank and then under great pressure and temperature in order to unlock the minerals to get the actual gold out. And then you refine it into a doré bar. And that's usually lots of water, lots of power, and requires a tailings dam. And it's $1 billion project. So it's like a $4 billion CapEx. Alan, when he brought that technology into the company and we did the PEA, it's a $360 million CapEx. So it's about the 10th. It requires a 10th of the water, the 10th of the power, right? We'll produce about 150,000 ounces gold equivalent a year at about 750 all-in sustaining costs. So, it's a much more compact project, right? Has a 1.4 billion NPV at 5% discount rate, 1,600 gold, $22 per ounce silver, and that's 35% IRR. So, it's a much more compact, but the economics are a lot better. And that only takes into account a quarter of the deposit, so 1/5 of the deposit is all we're looking at that point in that PEA.
Right, but where the PEA is one thing, what it could be. Where are we with the technology in terms of that optimization of that was the process going through previously? I don't know where it is. Give me the update in terms of where the process is.
Yeah. So just a quick. So you mentioned earlier, Matt, that when this works, and I actually brought some samples from the lab. So this is our rock from Metates. So it's gray. You see that gray color, right?
Yeah.
So that's sulfide ore and rare sulfide minerals. And then, so this is material that was taken out of the columns, right? And you can see that it's basically this brown color, yellow color, and that's oxidized. It's the same material, but this is after several weeks under our oxidation process, right? So once it gets
there's a process, a kind of lower cost process to get to that kind of redder, kind of copper color rock.
Yeah.
The oxidized rock. What does that do for you in terms of recovery? What's it do for you in terms of your economics?
Yeah, so that's a great question. So back in September, we put out this chart here. I don't know how well you can see this, but down here, if I were not, so this is basically the oxidation curve. So our first conceptual project or conceptual test came out to here. So that's about 20% oxidation on the rock. And right here, we got 60% gold recovery, and we got another 54% silver recovery. All right. If we didn't actually do the oxidation stage, and we just went straight to cyanide leaching like all oxide projects do, we would only get half of it. So we got 30% of the gold and 25% of the silver. So just by using the oxidation technology, we're able to double the recoveries. And that's just the beginning. So that was that one right there. We did a whole bunch of work, what we call the phase 2. And in the phase 2, the average is much lower because there was some variables that we weren't controlling and we weren't reviewing. But we're trying different things. We're trying different crush sizes. We're trying different alkaline solutions. We're trying on and off. There's a whole bunch of different things that we're testing. And through that process, we actually found one column that ran faster. So that's 50% faster than our best result previously. And it's also 300% better than our average from the previous phase. So we've obviously found something that's much faster. And ultimately, one of the greatest inventors was Thomas Edison, right? Thomas Edison, he invented the light bulb, right? So he made
you're
thousands.
Full of props today. I'm loving it.
So Thomas Edison tried to make thousands of these, and he failed 1,000 times. He succeeded once, And then that was the basis of every light bulb that went forward. And he tried to optimize it. Okay. So we've obviously found something that's much faster up here. And so what we're doing is we're continuing to optimize it and tweak it to get it even faster. Why do we do that? The shorter time it spends on that oxidation pad, the more time it gets to the leach pad where we actually use cyanide leach to recover the gold, right? So there's time value. So you're mining the material out of the ground, you're putting it on a pad, and you have to wait, right? So there's a whole bunch of working capital required up front before you start seeing the actual revenues generated. So the shorter the time on that pad, the more revenue we get faster. And so that's the key to this whole technology is nature does this. Our other deposit, Lucy, actually it's an oxide deposit. So there's an example here. You can see the rusting already in there. And this happened over millions of years, right? That obviously, we're not going to wait millions of years to oxidize Metates, right? We want it to be in a much shorter time frame. If we went the pressure oxidative leach technology, those tanks with the great pressure, that does it in like 30 minutes. So there's something in between 30 minutes and millions of years. And so that's the technology we have in-house. That's what we're basically trying to do over weeks rather than over years.
Right. I get it. I've got it since Alan started teaching me about this stuff. I guess what the market wants to know, your shareholders want to know is when do you get to good enough, get the process moving, get to a point where you can say, I can now predict when we're going to generate revenue, because it's having the ability to perfect it as a kind of scientist, or a geologist, because they love the science experiments, is different from being in a kind of commercial, entrepreneurial. It's a very difficult market out there. We've got to be agile. We've got to be nimble. We've got to be different or think differently to, one, be around to benefit from this, but two, to benefit from it commercially quicker. So
yeah,
what are those conversations like at board level? What are you driving for?
Yeah, so obviously the technology is key. And like I mentioned, I already have two other columns sitting in behind here that are moving up. So these ones are going to go all the way to 180 days. The next columns are going to go to 120 and then 60. And on the basis of those, we'll flip them all to cyanide leach. So then we got a data point at 120, we get a data point at 180, and we get a data point at 60. And we see how much gold is recovered at all those 3 points. And then we can determine, is it 100 days? Is it 90 days? How many days do we need to put this on an oxidated pad, basically, in order to move it later to the cyanide leach pad? So that work we're doing right now will be the basis of the PFS. So that's really the next step. So the work's going on right now in the lab. Next year we're hoping to put out results and, share to the market basically how much time it takes to get, individual increases in gold recovery and silver recovery as well.
Right. And I guess the good news is it's not expensive.
No, it's not. So the work that we're doing in the lab, we have, 50 columns right now in the lab working, and the run rate per month is about 100,000. So it's like a low cost work that's happening in the background. But Matt, the real exciting thing is Lucy. So I showed you the core before. And that's for the board and for me, that's kind of the more near term excitement, right? I'm going to let the columns work in the background, do their thing. I just want to be clear. I just want to be clear, because I'm saying as investors, we want to be clear about what we're investing into. I need to know the color of what I'm looking at. So the Metates is the big prize, but it's going to move at a pace. The good news is it's not going to cost a lot, but you got to be a little bit patient. In the meantime, you've got the capital to do drilling, and you've obviously made a discovery with Lucy as a nearer term in some ways prospect in terms of value creation. So, understood. So tell me about Lucy. What are you drilling? It was an asset that you owned previously, land that you owned previously? Yeah, so this is a piece of land that we've actually held for decades. And so this is an image of the property here. And it was sitting there dormant. About 2 years ago, we went and did a whole bunch of trench sampling along the property. So this is a long section. Whoops, upside down. There we go. And so you can see a bunch of the trenches here. So we have a trench up here at the top, and it's 40 meters of 4.4 grams gold. right? We have another one here, it's about 55 meters of 1.75 grams gold, right? And there's a couple in between. And what we realized from that work over the last 2 years is, there's some interesting hits here. And so this past year, we actually went and drilled under a bunch of these trenches, and we got about 6 grams over 25 meters right from surface on the hole to the furthest to the west. On the hole, let's say up here on the ridge, hole 10, we got another about 2 grams over 21 meters. And then on the far side here, we've got another 24 meters of 4 grams on this hole here. So 3.95. And so, great hits all from surface, right? These are amazing. You hardly find these kind of hits at surface. There's a lot of companies that are mining these grades at depth, and we have them right at surface. And as I said earlier, it's oxide, the gold. So this is one sample from the first hole that was on the far west side. So this is actually running 19.4 grams over the 3 meter sample. So you can see what that looks like. The next hole I talked about, this is running 6 grams over 3 meter sample, right? This was, 6 meters from surface, right? So it's right near surface. And then the final hole, which is the one on the farthest to the east. So this is another 3 meters, and this was running 10.5 grams. So really good grades right at surface. It's a game changer for the company. And a lot of companies out there, there's still excitement about exploration and doing that sort of thing. And our shares have traded up on the release back in October. And I was actually just at the Scotiabank conference earlier this week, and I had a lot of investors asking about Lucy and wanting to get an update on where that is. So what we're doing in the background is we're actually planning the next phase of drilling. So the great thing about exploration, I can do the work, I can get the results, I can share them with the market and be a little bit more timely and update the market on Lucy and the discovery as it grows. Right.
Right.
And
okay. That's going to require capital, obviously. And so, have you got a sense of how much capital you want to deploy? How much have you got? Will you need to raise any? And in terms of meters, I mean, what does that mean you're chasing?
Yeah. So, as you know, Matt, we have about 22 million in the bank account here, so we're really well financed. So I don't see any near-term need to go out to the market to raise more money. Exploration in Mexico is much cheaper. Exploration in Mexico, it's about $150 per meter, right? It's low relative to other jurisdictions globally. I've worked at other companies where we're talking $450 a meter, right? So it gives you an idea. This is a third of the price to do some good quality work. I think the next program that we'll have is what we're working on right now is we're going to do some infill drilling. There's a bunch of trenches we haven't actually drilled under yet. So we'll go back and drill. There's potential to expand on either direction. But then there's a whole bunch of additional work. We'll do geochem sampling and mapping along strike to get an idea. The one thing I want to do is I want to make sure that all my holes are hitting mineralization. And, it's such early days, we actually don't know how long the strength is at surface. We actually don't know how deep it goes. You only have 25 meters from surface, basically, with mineralization at this point. There's a lot more drilling at depth. This next program will understand its lateral extension and its extension at depth too. So that's kind of the work that we're doing.
Okay, and talk to me about Mexico. Obviously, look, with cash in the bank, and I guess in a very real sense, it doesn't matter what the market thinks or what the market's doing at the moment, but the ability to do business in Mexico is still there. Do you think the kind of negative sentiment towards Canadian silver juniors is a factor of unsure of what the government's intentions are and therefore not investing into Canadian juniors at the moment? For you, is it very much business as usual?
Yeah, so for us, we actually have permits on this already to do the next phase program, so we're all good there. We also have temporary imperials in place, so those are basically injunctions that we're working to get as permanent. So it allows us to continue doing work and to continue to advance the projects. We work with our local communities, we work with the local government, and as time tells, we want to continue to commit to Mexico and advance it. Things change as time goes. And it's when it's challenging, that's when you can advance things and create real value for investors.
Okay. No, well, I know the reason I've got to ask that question, because you're seeing a lot of juniors, perhaps, he may not kind of get to the other side because they're kind of cash strapped, in the sense they can't get at capital, they can't get at cheap capital, even if they can, and it potentially terminal and then talk of M&A, etc., until there's kind of a little bit more certainty from the Mexican government about how it tries to plans to treat mining in country. But glad to hear it's kind of business as usual for you guys. Well, look, Jean-Paul, I think that's like a really nice update and summary. I think it's much clearer in my head in terms of what type of company you are, and what you're trying to do, and and what we should be looking for the next few months. I mean, your view for 2024 for you guys. I mean, what would you say to shareholders?
Yeah, first and foremost, look out for new results on Lucy. Right, we're definitely going to get back to that. We're going to do some more exploration there. I want to basically shine a light on that project and bring it to market so that everyone can see the excitement that we have within Chesapeake. On the Metates and the metallurgical work, it's still ongoing. The lab looks really great. I was just there last week, as I mentioned. So I'm hoping to have new results out for the metallurgy and give everyone an update. And then finally with Metates, on the back of the good results of the lab, we'll continue to advance it.